You're listening to the Finance Magnates Daily Brief, brought to you by Finance Magnates Intelligence.
Today's Tuesday, the 4th of August, 2026, and these are our main stories. Why retail brokers are dropping the word markets from their brands, XTB shares reaching new highs despite a platform outage, and Interactive Brokers reporting continued growth in client assets. To begin today, a growing number of retail brokers are simplifying their brand identities by removing the word markets from their names. Companies including IC Blueberry and Admirals have all adopted shorter branding as they expand beyond traditional Forex and CFD trading into areas such as crypto, payments, and prop trading. Branding experts interviewed by Finance Magnates say the shift reflects business maturity rather than an effort to appeal to younger traders. A shorter name is easier to remember and supports broader product offerings. However, a global rebrand is a lengthy and expensive process that can take up to a year and requires extensive coordination across legal, compliance, technology, and marketing teams. Meanwhile, XTB's shares climbed to another record despite a trading platform outage during Monday's U.S. market open. Users in Poland and other regions reported problems accessing the broker's web platform and mobile application, with complaints continuing for several hours. XTB has not publicly explained what caused the disruption or how many clients were affected. Even so, investors remained focused on the broker's strong financial performance. Last week, XTB reported preliminary second-quarter revenue of nearly 1 billion Polish zloty and net profit of more than 492 million zloty, comfortably exceeding analysts' expectations. Turning to brokerage performance, Interactive Brokers continued to report strong client growth during July, even as trading activity eased from the previous month. Client accounts rose 34% year-over-year to more than 5.3 million, while client assets reached almost $907 billion. Daily average revenue trades declined 16% from June, but remained 27% above July last year. The broker also reported continued growth in client margin loans and credit balances and noted higher execution costs for IBKR Pro stock trades during the month. Elsewhere, executives from 8-cap challenges and TTT markets have questioned how profit consistency rules are applied across the prop trading industry. While both defended their own firms' approaches, they criticized some competitors for using rules that appear designed to reduce payouts rather than encourage disciplined trading. The discussion also touched on 8-cap's return to simulated trading after withdrawing from prop partnerships in 2024, as well as the wider trend of prop firms expanding into regulated brokerage services. Both executives expect sensible regulation to arrive eventually, but do not believe retail prop trading will be banned. Finally, the UK's Financial Conduct Authority has confirmed reforms that will reduce annual transaction reporting costs by an estimated £108 million. The new rules, which take effect in April 2028, remove foreign exchange derivatives from reporting requirements and simplify reporting obligations for hundreds of firms. However, contracts for difference and spread bets will remain within the reporting regime because the FCA says they continue to present significant market abuse risks. While firms face substantial implementation costs, the regulator believes the long-term savings will outweigh those expenses and has already introduced a flexible supervisory approach for firms ready to adopt the changes early. That's your Finance Magnates Daily Brief for August 4th, 2026. For the full stories, head to financemagnates.com. We'll be back tomorrow. Stay sharp.